But the structures conversation has fundamentally changed. So what do? You call your accountant, Laura Stouter. She's mine. She's going to tell you exactly what's changed with CGT, give you some info about trusts, companies, and what you need to do about it. Laura, thank you so much for joining us here at Finance But Neat. Last minute ring in. Thank you. But the changes I believed were so important to self-employed clients that I work with, property investors that I work with as well, that I absolutely wanted to get your opinion and information and knowledge on a few things that just aren't clear yet, right? So first thing off, CGT changes. What are they and what do they actually mean for property investors?
Thanks for having me on, Alex. I guess it's really important to point out here that nothing of this has been legislated yet. Us accountants have seen a lot of stuff proposed in the past that then gotten changed, and there's always been a huge amount of media coverage around it. So everything I say is proposed, not legislated yet. So we'll wait and see. CGT, what's changed is essentially how it is taxed from the 1st July 2027 onwards. So historically, let's say you purchased an asset for $100, you sold it for $100, you sold it for $200, you had a $100 capital gain. That capital gain then had a 50% discount, so you only would have been taxed on the $50. What's changing now is if you, again, bought an asset for $100 and you sell it for $200, that purchase cost is adjusted for inflation. That's what they call indexation. And then the difference between that and what you sell it for is going to be taxed supposedly at a minimum of 30%. So you can see that there will be a lot more tax payable potentially than historically on capital gains.
So one of the things I think that I'm really, and look, you told me about this and really blew my mind. It's going to be kicking in from the 1st of July or 30th of June, 1st of July. These laws come in. If they pass through the budget later, there's a whole heap of layers here, right? So I do not envy your position whatsoever. From a practical perspective, if I'm got my properties, commercial, resi, whatever they are, should I be getting valuations done at the end of this financial year?
So these changes come in from the 1st of July 2027. So it's not even the end of this financial year.
It's next year. Gosh,
and I should know that. Well, it all gets a bit murky at this time of the year. And my understanding is that the government will provide a method how you can calculate out the market value at that time, to be confirmed, I think. Again, this is one of those wait and see patterns because I feel like a lot more will become clear in the next year. I think what's important to highlight here is that if you have an existing property on which you have already made a potentially big capital gain, and you hold it in your own name or trust or partnership, then that gain from whenever you purchased it up to the 30th of June 2027, that is grandfathered. So that's still under the old rules. It's simply then from the 1st of July 2027 onwards, that gain will then be indexed under the new rules.
So in terms of practically implementing anything now, it's really just a holding pattern to wait and see what happens when it comes specifically to CGT.
For the investors, yes.
Yeah,
I would say it's very much the same for us.
Yeah.
There's just nothing solid yet we've got.
Yep, awesome. Moving on to trusts, it feels like they've lost a bit of their shine. Why and what's changed?
So again, historically, trusts were given you the flexibility that you could decide who to distribute the funds to each year. So you could distribute it to someone on a lower tax rate if you had that option, getting a tax incentive. The proposition the government is making to change that moving forward and to change it to a flat rate 30% payable by the trustee. So from a pure tax perspective, trusts are going to be less attractive. However, a the tax side is only one reason why you would use a trust. The other side is also asset protection, succession planning. So that's more a lawyer's playfield, I guess, but that is still why you would purchase or use a trust. So again, tax is only one aspect of that.
So not only are we making more money out of the budget for accountants, because let's be honest, financial planners, they're going to be having a lot of people. Now we're adding lawyers, the real winners of the budget, right? So
yes, not gonna lie, we were worried about AI, now we're not so much.
Awesome. What a world to live in. So is the case with the trusts being somewhat less shiny, so to speak, very much like Tamatoa, is the case coming towards buying in property within companies, or is it just becoming an increasing option?
Look, I think I would have given you the same advice 2-3 weeks ago, is every single case needs to be looked at individually. What's the best structure to use for that particular client at that moment in time? And that's kind of the struggle we're facing now, because if I've got a client that's currently wanting to make a purchase, I can only educate them around the proposed changes, what I think might be best in their situation, but also highlighting that I'm not sure if it's going to be legislated. I think the key point here is currently seeking advice if you are purchasing in the near future, because let's be honest, the world is still going around, people are still going to invest. If you already hold assets in a trust, it's probably a little bit of a wait and see from the tax perspective, because the government has advised that there are going to be rollover provisions available from the 1st July 2027 again onwards. However, they haven't advised us what those rollover provisions are going to look like. So there's not much that we can actually do yet. It's just waiting.
Yeah. It definitely seems they're more in sale mode of the budget as opposed to actually putting a plan forward at times. So with all that in mind, this is obviously a pretty murky thing for some investors to walk through. And I suspect if negative gearing does go away, there will be an increase of people who should have been investing in entities to begin with, investing in certain entities or with certain entities. How do you have that conversation properly with your accountant at the moment?
I think it is really probably the same what you would tell clients. If you are thinking about investing, talk to your advisors. That is, talk to your accountant, talk to your broker, talk to your financial planner, so they are aware and they can highlight anything with you. I mean, again, when someone talks to me about where they want to invest, depending on their situation, I would probably say to them, these are the options. However, I am unsure how you could potentially get finance in those entities. Have you met Alex? So I think that's where moving forward, it's just going to be more important to just advise, like your advisors, what your plans are, so we can flag things with you and highlight them proactively.
Yeah. I think it's to kind of round out that analogy, right? For me, the accountant is a necessary evil. No, I'm kidding. But it's you're necessary, Laura. But it's really, there's so much, like I learn every time I chat to you, I learn something new about tax law. And I've been deciphering business financials for a decade plus now when it comes to lending, right? So it never stops. And to think that you can manage that yourself, I think is a little bit, like, come on, let's be serious. You've then got the financial planner, who I believe is the glue with the whole thing, really brings a lot together. And then you've got the broker, and who's kind of the, hey, this is what you can do and where you're at and how you navigate it. So the team matters more than ever. And then, of course, buyer's agents to actually help you nail that asset. So there's a lot going on here, and more important than ever to get your team together, which you play a critical part of my team. So thank you. Last question. If this passes, let's just go, hey, the 30% comes through, it's happening. Is there still a reason why we would be using a trust to invest in property?
Potentially, yes. Again, for asset protection purposes, I would still consider it, and succession planning. Again, it really just depends that benefit cost, you have to really look at it at that time. Educate the client and say, look, based on the information we know now, this is our best suggestion. However, this could change and that could change, and that would still apply in the future, you know.
Yeah. So to kind of summarize that, I guess you're saying you need to make sure that your wills and estate lawyer is taking care of everything, and they're having a collaborative conversation with you to make sure that this is all being executed in a way that makes sense. Is that?
I think, because, I mean, again, this is probably more where, you know, if someone runs an extremely risky business that they could potentially be sued themselves. If they then own assets in their individual name, such as shares in a company that owns property, that's where still there could be a problem. That is where you have historically used trusts. I mean, if you talk to any insolvency accountant, they love trusts for that reason.
Wow. All right. Look, the asset protection discussion is just not one where we've really touched on. I think there's a lot more depth there to kind of break into, right? Especially if you're self-employed, which is your client base.
Exactly.
Largely.
Yeah, and I think that's where I'm hoping the government, as they are going to legislate this or not, they have a lot more thinking to do how these effects actually flow on and are applied to small businesses and not just big businesses and people that make a lot of money. And maybe we see some changes.
I have some strong thoughts about that, but that is not what we're doing today. Thank you so much for joining us at Finance But Neat. Laura, you're going to be on a podcast in the not too distant future. So looking forward to having you in, and we're going to be doing some talking about tax planning.
No worries. Chat
Awesome.
to you then.
Thank you. We'll do. Laura said the team matters more than ever. The accountant, the planner, the broker.